As a business owner, you have a choice. You can either make money and pay taxes, or you can not pay taxes and not make money. Hello, my name is Nick. I'm a fractional CFO with Living Water Consulting here in the Metro East. Today, we're going to talk about how profit planning is not tax planning. Huh? I thought that's what we were doing when we were tax planning, is we're making profit. Nope. So let's talk about the misconceptions first, okay? Most owners think that tax planning equals profit planning. No, because you have to plan for your profit and then taxes happen, not the other way around. Here's another one. Paying less taxes somehow would equal making more profit. While we might think that would be the case because we were trying to reduce that taxable liability, the only real way to reduce your tax liability to a certain point is by making less profit. And you keep asking your accountant to, well, how can I make less taxes? By making less profit. So what would you rather do? Make more profit and pay more taxes, or make no profit and pay no taxes? Some of you are going with the latter, not the former. And so the truth is, if you have no profits, then you have no taxes to pay. And that seems to be the strategy your accountant is trying to give you. Why? Because you're asking him for it. So let's look at profit planning a little bit. What it does is create a focus on profit, right? The things that you need, like to make owner's wage, to make distributions, to make cash flow. I'm just going to say it like that. Like, this isn't rocket science, right? So what we do is we look at revenue targets, we look at our margin control with our cash flow, right? This is a forward-looking strategy. We're not looking back. So we want to build growth, wealth, and security for our business. So what is tax planning? Let's look at the other side of this. Here the focus is to reduce our taxable income. And so we do it by deductions, credits, timing, and structure. Sounds great, right? All of this is compliance driven and is defensive, meaning it's looking in the past, right? But it protects your wealth, it doesn't create it. And that's the move everybody thinks, that somehow I'm going to save in order to create my wealth. No, you're going to have to pay Uncle Sam, I'm sorry. So why profit comes first? Well, profit fuels your reinvestment in the company, cash flow, and your owner's pay. But you can't reduce taxes on money you haven't earned yet. And let me explain what that means. So I hear a lot of times people looking for tax credits, right? Why don't you look for getting revenue instead of looking for tax credits? Revenue makes money. Tax credits, they save you a fraction of that profit. Again, a fraction of that profit. It's better to make the profit than the fraction. But, and also too is, write-offs don't matter if you don't have profit. So again, if you're not worried about profit, why are you even worried about taxes? So what are some key takeaways? Profit planning, that's offensive. Tax planning is defensive. Both matter, but we all know that offense wins games. So what do? You want to build, you want to use, and then you want to check up. So first, go to livingwaterconsulting.com and go to game plan, and you can look up how you can get your own profit plan. Then you can use that and take that and do some tax planning to protect that money. Finally, go to livingwaterconsulting.com/checkups and take our free profit booster. We're only going to take a couple minutes, and you don't have to create numbers. You'll get an output at how you've been doing at your business.